ABBV Stock, ticker symbol ABBV. This stock is down 7% year to date and has gone up and down quite a bit so far. On the 27th of July, AbbVie presented quarter results where they beat on EPS and revenue, which was a big surprise to a lot of people. This led to an increase of almost 6% in stock price after earnings were released. And most people love AbbVie because of the dividends, and I understand why, with dividend yields sitting at 3.98% and a great growth track record. So could this be the perfect moment to buy ABBV stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does AbbVie do? AbbVie is a pharmaceutical company with a strong exposure to immunology and oncology. It is one of the largest pharmaceutical companies in the world. First, some high over results. AbbVie reported a diluted EPS of $1.14, representing an increase of 123%, which is looking really good. Adjusted EPS was reported at $2.91, a decrease of 13.6%, which is something to keep your eye on. Net revenue was reported at $13.8 billion, a decrease of 4.9%, which is also something to keep your eye on. But investors and analysts were expecting a bigger decrease, so that's also one of the reasons why the stock went up despite these earnings. And if we take a quick peek at the main segments, we see that immunology, the biggest segment, reported a 5.5% decrease in revenue, of which Humira had the biggest impact. We will dive more into detail in a minute. Oncology decreased 10%, which is not looking that good. But the third segment, neuroscience, increased 13.6%, which is very nice. The fourth and last segment, aesthetics, increased a small 1%, which is nothing too spectacular. AbbVie raises the 2023 EPS guidance range from 2.57 to 2.97 to their new range of $10.9 to $11.1, which is very nice. In this sheet we see a lot of numbers, but don't worry, I will only cover the important ones. So first and biggest segment, immunology, representing roughly 50% of the total revenue. It decreased 5%. Humira, the top drug representing roughly 28% of the total revenue, decreased almost 25%. This is because of the patent loss, as we all know. Nevertheless, still keep an eye on this number, since it's their main top drug. The two other top drugs in this segment, Skyrizi and Rinvoq, are both seeing a 50% increase in revenue, which is really nice. The thing that I like here the most is that they are still capable of growing in high amounts. Second biggest segment, hematologic oncology, is decreasing 9.8% year over year. And this is because their main top drug in this segment, Imbruvica, is decreasing 20% year over year. Both the aesthetic segment and the neuroscience segment are seeing some decent growth year over year. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue diving into the fundamentals. AbbVie is a $267 billion market cap company, making them one of the largest pharmaceutical companies in the world. PE ratio is at 35, which could indicate that they are at a premium right now. Later in this video I will show you my 3 price targets for AbbVie stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 56 billion, and in this graph we see that revenue went up really nice and steady. But most recently it started to decrease a bit, which didn't happen since 2012. Margins are always going up and down with this company, and most recently it started to increase again, which is a good thing. EPS did increase in the long run, but it is pretty similar to the margins. It is going up and down quite a bit. Analysts expect 2023 and 2024 to be a tough year, which is quite logical with everything happening at Humira. After this period, they expect to see a high single-digit increase in EPS. For the revenue, it is a pretty similar pattern and is expected to see a mid-single-digit growth in 2025. Return on assets is sitting at 12.9%, which is a great number. Return on equity also looks really good. And the most important number, return on invested capital, is sitting at 14.9%, which is a great number. Unfortunately, it is lower than the 5-year average, so that is something to keep your eye on. Current ratio is at 0.96, which looks pretty good to me. Over a longer period of time, it is decreasing, which is not a bad thing. And to me, it's very important that free cash flow is growing, since this is used to pay down debt, of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up in the long run, even at a steady and consistent pace. Shares outstanding are increasing, which is not a good thing usually, but with ABBV you could argue if buying back shares at this point is the best thing to do, so I don't blame them for issuing new shares at this point. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 3.98%, which is a great number. Annual payout is at $5.92 and payout ratio is at 46% and not the 22% displayed here. I prefer 50% or lower, so right now they have roughly 54% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 12%, which is a great number and one of the reasons why I love this stock so much. On top of that, they increased the dividends for 9 years in a row. And if you take a look at these numbers, the dividends paid since 2013, you see that ABBV really likes to increase the dividends, which is very nice. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio is decreasing. But most recently it is increasing a bit. So that is something to keep your eye on, since you don't want them to cross the 50% line. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to grow at historical growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare ABBV stock with the overall market, in this case the S&P 500. Next to that I added Amgen and Gilead. On the 5-year chart we see that ABBV crushed the S&P 500 and both competitors with 107% return, including dividends. The S&P 500 is the closest with 75% return. On the 1-year chart it is looking pretty different with ABBV returning 2%, underperforming the S&P 500 by a significant amount. But Gilead had the highest return with 30%. On the 6-month chart it is the S&P 500 with the highest return, 12% in total, beating the other stocks in this list. On the 1-month chart it is ABBV with the highest return, which is very interesting. So bottom line, ABBV beats the S&P 500 and competitors in the long run. And most recently it started to create some momentum too. So is this the perfect time to buy ABBV stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4, 5 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 13, 14.5 and 16%. And for the free cash flow margin I'm putting in 28, 30 and 32. For the PE ratio and the price to free cash flow I'm filling in 20, 22 and 24. It is a massive company that is still capable of growing in decent amounts. In some areas they also have a moat in my opinion. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now ABBV stock is at $150. I hit analyze and we only see a few green numbers. We have a low price target of $63 to $137, which is a big drop from the current stock price. We have a mid price target of $81 to $167, which is still a big drop from the current stock price. And we have a high price target of $102 to $204. To me, the mid price target is the most justified. And to be honest, I'm focusing more on the discounted cash flow value instead of the multiple of earnings value, indicating that this stock is slightly undervalued given the price target is sitting at 167. My final conclusion on the stock is that I think it is undervalued. It is seeing some short-term problems and is expected to have these problems until late 2024. Revenue will slow down and their top drug Humira might lose its mode position. However, AbbVie has a great pipeline and new top drugs are rising. Although the stock is slightly undervalued, I'm waiting before buying new shares. I'm planning to start buying at $135 to have a higher margin of safety, since there are of course some higher risks with this company. In the meantime, I will keep collecting the dividends and analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.